there's all kinds of ways that you can use this. Here's something a little bit different. This is the gold-silver ratio. We're taking the GLD and the SLV. So in this case, gold was outperforming silver, but as soon as the market started to drop, you can see this was a topping process here. You would take your trend line again. In this case, I would set up a channel, but it's same thing. If you start to see a topping process going on and the market is starting to decline, that means silver is now outperforming gold. You want to find out who the outperformer is. In this case, silver from August of 2010 through April of 2011. Silver outperformed gold because you can see it's in a dramatic decline here on the ratio. And so you would go long silver. It just means silver is outperforming gold. Now, when the market started to go up, right here, and what you want to do is put a trend line in. You can see a dramatic turnaround. Now, all of a sudden, gold is starting to outperform silver. So what you want to do, as soon as that broke that trend line, you want to get out of silver and go long gold and continue to follow that until it breaks this trend line. That's what makes ratio trading so much more simpler than trying to actually pick an individual stock and determine support and resistance areas and try to determine, when to get in, when to get out, using Fibonacci ratios and using all kinds of complicated formulas in order to determine when to go long an individual stock or ETF. Ratio trading makes it very, very easy. If you're taking two similar issues that normally relate to each other and finding out which one's strong and which one's weak, simple trend lines do the trick. You don't need anything else. That's why it makes it extremely simple to use and extremely powerful in the signals that it gives you. So the only thing you really need to do is identify new trends. So as soon as it started going into a new trend, you say, okay, silver is now outperforming gold. I'm going long silver. And as soon as it makes this dramatic turnaround here and it looks like we're in a new uptrend for gold, then I'm out of silver and I'm into gold. And that's what makes this type of trading so exciting. And this is the way professionals trade. The top 1% of all the traders who are making tons of money are doing this on a regular basis. They are simply doing ratios. They want to find what issue is stronger than the other, and they're going to go long that. And if the other issue starts to come on strong, then they're going to go long that. Some of the most consistently reliable ratio trades are the gold-silver trade. The gold-silver ratio is consistently reliable and it trends extremely well. Just remember that when this chart is going up, it means the first issue is outperforming the second issue. You want to go long that. When it starts to go into a topping process and you're into a new trend downward, you know that the second issue is outperforming the first. So you want to go long the second issue. And then, of course, what you can do is measure just about any issue that you want against an index. For example, here's AT&T versus the S&P 500. I want to see if AT&T is going to outperform the S&P 500. And you can see it wasn't really a clearly defined trend, so I'm not going to get involved. Here's U.S. Steel compared to the S&P 500. Well, you can see that it really not only did it not perform very well against the S&P 500, it was in a consistent downtrend to the S&P 500. So because it is in a defined trend, and that's what you're looking for. You're looking for a defined trend. And if it's not performing the S&P 500, you might even want to go short U.S. Steel here because it is in so deeply underperforming, so vastly underperforming the S&P 500 that you might even want to go short that issue. Here's AXP against the S&P 500. You can see that for the most part, it stayed pretty much the same. There's no clearly defined trend there, so I would stay out of that issue. Here's Alcoa against the S&P 500. You can see that it did outperform for a little while. You can see the clearly defined trends here. They're really, really nice. And as soon as it broke that trend, you want to get out. And then it went into another trend here, and it's still in that downtrend now. So you want to stay involved in that to the downside if you decide to short Alcoa. And as soon as it breaks that trend line, you're out. It's very, very simple to trade these. Here's the emerging market ETF. You can see that the S&P 500, for the most part, from October of 2010, has outperformed it. It's not a clear. It's a little bit more volatile. It's not a clearly defined trend, so I'd stay away from it. Here's the XLB. Again, not a real clearly defined trend there, but you can see the huge volatility at the top here. So you may have thought about going short right in this area here. That's not a bad trade. Here's the XLF, the financial ETF, against the S&P 500. You can see how terrible it has performed against the S&P 500. It's been in a consistent downtrend since April of 2010, and that's a pretty good, well-defined downtrend here. It looks like it may be starting to create a little bit of a bottom here, but it's still too early to tell.